welcome to This Explainer. Today we're diving into a really fascinating paradox. We're going to explore how a company built entirely around caution, literally putting the brakes on, quietly ended up conquering the massive enterprise AI market. For years, the narrative in the tech world has been pretty rigid, right? Whoever ships the fastest wins. But today we're unpacking a deeply researched breakdown of how a company named Anthropic totally broke that rule and somehow sprinted to the top of the commercial ladder by fundamentally slowing things down. It's a total contradiction. On one side, you have your classic Silicon Valley playbook: move fast, break things, ship first, and capture all that consumer spectacle. But then you have Anthropic's playbook, which honestly looks completely backward. While the rest of the industry was racing to release the next flashy chatbot to the public, Anthropic intentionally tied its own hands. They wrote down strict limits and built massive safety guardrails. To pretty much everyone watching at the time, this seemed like a guaranteed recipe for coming in second place.
Section 1. The Contrarian Safety Bet.
Let's actually rewind to December 2020. A group of top-tier researchers literally walked right out the door of the industry leader, OpenAI. And this wasn't some petty dispute over money or job titles. It was a fundamental disagreement about the speed at which things were moving. They firmly believed the industry was building raw AI capabilities way faster than it was building the ability to actually control them. So they stepped away and founded Anthropic as a public benefit corporation, focusing their entire identity on AI alignment. And they swiftly raised over $120 million to prove this thesis. So here is the ultimate paradox. Careful is the exact opposite of fast. Yet being careful is exactly what won them the enterprise market. By slowing down and focusing on that critical gap between capability and control, Anthropic actually created their greatest commercial accelerant. They realized something crucial that their competitors completely missed. While everyday consumers are out there chasing novelty and speed, massive enterprise businesses, they value reliability above absolutely everything else. Because think about it. If you're a hospital or a massive bank, an AI that hallucinates 5% of the time isn't just some fun, quirky bug. It's a massive multi-million-dollar lawsuit waiting to happen.
Section 2. Trust as a product.
Now, what's really amazing here is how they literally turned ethics into hard engineering. They introduced two absolutely monumental concepts. First, constitutional AI. This meant the model's behavior wasn't just some mysterious black box tuned by random human contractor ratings. Instead, it was governed by explicit, written principles that the AI actually uses to critique its own answers. Second, they rolled out a responsible scaling policy, which explicitly models AI growth on biosafety levels, meaning they made a very public commitment to completely halt their own progress if strict safety thresholds weren't being met. And here is the genius part. These safety tools weren't just for researchers writing academic papers. They were the exact reassurances a nervous enterprise chief information officer was desperately looking for. Imagine you're a CIO tasked with buying AI software, and you have to defend that multi-million-dollar choice to your board of directors. Anthropic essentially handed them a silver bullet: written rules, a legally defensible methodology, and a promise of predictable future conduct. It was the ultimate, irrefutable sales pitch, brilliantly disguised as a nerdy safety white paper.
Section 3. Winning the Enterprise Builders.
So, with trust established at the executive level, they needed to win over the actual users. When they released the Claude 3 lineup, they didn't just drop one massive, ridiculously expensive model. They offered a really smart, tiered structure. Opus for the heavy, deep reasoning, Sonnet as your perfectly balanced daily workhorse, and Haiku for fast, repetitive tasks. This allowed businesses to match the exact cost and capability to their specific workflows, proving Anthropic inherently understood the actual economics of enterprise deployment.
But honestly, the real game changer was the capability itself. Claude became spectacularly, undeniably good at coding. Now, developers are a notoriously tough crowd, right? They do not care about fancy marketing, they only care about what actually works. And they rapidly discovered that Claude could read massive code bases, sniff out bugs, and write flawless code. By mastering this specific skill, Claude effectively turned independent software developers into this massive, unpaid, bottom-up sales force that championed enterprise adoption from the inside out.
This intense loyalty really culminated in a product called Claude Code. And guys, this wasn't just another chatbot. It was an agentic tool that lived directly inside the developer's own command line environment. It could autonomously read files, run tests, and execute changes. It fundamentally shifted the human's role from being a typist to being a director. The adoption was explosive. It shattered growth records, hitting a massive $2.5 billion run rate by early 2026. It proved, without a doubt, that whoever controls the developer environment controls the future of the enterprise.
Section 4. Open Rails and Massive Scale.
Okay, so if we zoom out, we can see this brilliant four-step masterclass that drove Anthropic's climb from a quiet underdog lab to an absolute enterprise giant. We've talked about how they productized trust, and we've seen how they won over the builders. Now let's look at the final two strategic steps: owning the Rails and securing the substrate.
To own the Rails, they introduced the Model Context Protocol, or MCP. Instead of forcing developers to write custom code every single time they wanted to connect an AI to a new database or tool, Anthropic basically built a universal open connector. And then, and this is the crazy part, rather than keeping it proprietary, they gave it away completely for free and donated it to a neutral foundation. This completely neutralized any fears of ecosystem lock-in and made Anthropic standard the absolute default plumbing for the entire AI agent era.
Next, to secure the substrate, which just means the immense physical hardware and power required for this kind of technology, they struck a jaw-dropping multi-year compute commitment with Amazon. To put this into perspective, we are talking about a commitment of well over $100 billion over a decade. By locking down massive clusters of custom AI chips, Anthropic secured the raw industrial scale they needed to stay at the very frontier of AI, all without having to build a single chip factory or power plant themselves.
And the payoff? It's literally staggering. According to surveys from Menlo Ventures, Anthropic's methodical, ultra-careful approach successfully captured a commanding 40% of the enterprise market by 2026. They cleanly overtook the incumbent, who dropped down to around 27%. Against all odds, they had officially become the default enterprise choice.
Section 5. The price of scaling.
Now, scaling an AI juggernaut in the real world obviously comes with massive speed bumps. In 2025, even with their heavy focus on safety, Anthropic had to agree to a historic $1.5 billion copyright settlement over their training data, specifically regarding works obtained from shadow libraries. It was a stark reminder that having a safety brand doesn't necessarily mean you have immaculate, flawless provenance. But it also proved that Anthropic's massive commercial scale allowed them to absorb a financial hit that would have completely vaporized a smaller company.
Which brings us to a really profound, kind of uncomfortable dilemma known as the safety paradox. Remember, Anthropic was founded specifically to slow down a dangerous AI arms race, but by raising tens of billions of dollars, securing massive compute deals, and pushing the frontier forward release after release, did their incredible commercial success inherently accelerate the exact same race they were trying to warn us about? It's a tough reality where they are simultaneously part of the problem they diagnosed while arguably being the most responsible actor within it.
CEO Dario Amodei navigated these massive stakes by articulating a sort of double vision. On one hand, he published an essay painting this deeply utopian future where AI cures diseases and compresses decades of scientific progress into mere years. But on the other hand, impartially looking at the geopolitics of the situation, he actively lobbied for strict export controls on advanced AI chips to authoritarian adversaries. He argued that democratic nations simply must maintain a durable lead. This firmly positioned Anthropic right in the center of global political strategy.
Section 6. The public market test.
Just listen to this revenue trajectory, because the numbers here are just wild. Anthropic skyrocketed from a $1 billion run rate in early 2025, jumped to $9 billion by late 2025, and hit over $30 billion by early 2026. They were pulling in revenue at a pace that absolutely commanded the attention of Wall Street. It proved their contrarian go-slow strategy was, in reality, a literal money machine.
Armed with that kind of enterprise default status and a highly credible path to break-even profitability by 2028, Anthropic made a huge move in June 2026. They filed for a confidential IPO. Ultimately, they needed to unlock the deepest pool of capital available, the public markets, to actually fund those $100 billion compute commitments and stay in the race.
Which leaves us with this final, completely open question. Now that they've decisively won the enterprise, can Anthropic's foundational restraint survive the unforgiving, quarterly glare of the public markets? Will Wall Street actually reward the caution that built their enterprise trust in the first place? Or will the relentless, insatiable demand for growth hollow out the safety mission that started it all? Their safety bet paid off spectacularly in private, but the ultimate test of its survival? Well, that is only just beginning.